Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Holding fire, the U.S. and Iran pause attacks as Iranian and Omani officials meet for talks to resolve shipping through the Strait of Hormuz. Oil retreats as tensions ease, stocks gain, and the dollar weakens as investors dial back energy supply concerns. And robust debut, Chinese memory chipmaker CXMT soars by more than 500% as it starts trading on the Shanghai exchange, tapping in on investor hunger for the AI trade. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. It looks like we're off to a positive start of the week when it comes to equities. S&P futures are 0.7% higher now. This is easing geopolitical tensions out of the Middle East, a halt of attacks by the United States after 13 days of attacks on Iran. Iran saying the same thing, but also tech is very much alive and well. We still await some key earnings out of the rest of the Max 7 later this week. And so you're seeing that return to the market. We're seeing things in the green. We're awaiting, again, those earnings from Microsoft, Meta, Amazon, and Apple. But investors are looking for more than profit beats now. This is evident from what we saw in the chip-making space last week, the sell-off there. Investors are now looking for more. Again, as I said, they're looking for AI CapEx guidance. They're looking for investments in data centers and the spending there. So that will entail what happens in the market later today. MSCI Asia Pacific also higher, but a little bit more caution there. 0.3%. The Kospi in South Korea was gaining earlier in the session. It is now dropping, so between losses and gains. And then Brent crude is at $92 a barrel, about 5% lower for a second straight day. We're seeing a drop again because of that lack of escalation that we're seeing out of the Middle East. We'll talk more on the show about what is happening there. And then the yield on the 10-year notes in the United States, 4 basis points lower, 4.63%. We await the Fed decision on Wednesday, but then this is a week filled with central bank data. We also will await the BOJ and the BOE later this week. And we'll see what the United States or what the Federal Reserve decides to do with the uptick that we've seen in energy prices earlier over the past 10 days or so. But for a closer look on what is happening in Asian equities this morning, we've got Avril Huang in our Singapore studio. Avril, what do you have for us?
Yeah, Bia, we're seeing Asia stocks mostly trending lower today despite initial gains and a bit of that rebound from Friday's onslaught, as you highlighted. Things are looking more tentative now among the big 3 indices in the region, the Nikkei, TAIEX, Kospi, and this is despite, as you said, the slump that we're seeing in oil prices as there's continued unwind in the AI picks and shovels trade because the concern for investors now is squarely on whether huge capital expenditures indeed translate into huge enough profits. That aside, we are also, of course, watching one stock, and that is Changxin Memory. This is a company that's made its trading debut in Shanghai after a $9.8 billion IPO. We've seen how this is the second largest IPO ever in China. This is China's best shot at reducing the reliance from some of these AI companies on foreign suppliers. And certainly it's managing to tap into the investor demand and the appetite for these memory chip story, particularly out of China. You're seeing the extension 530+% there on Changxin Memory on its first day of school. Abir?
Avril Huang in our Singapore bureau there with the details, that 500% gain, whopping gain. Well, let's turn back to the regional story. It has been a quieter weekend across the Middle East after the United States and Iran held fire following weeks of escalating tensions. The U.S. military has paused strikes since late Friday without explanation or announcement, while the Islamic Republic signaled it was refraining from any retaliatory attacks. It's also held talks with Oman over the Strait of Hormuz. U.S. Ambassador to the United Nations, Mike Waltz, says President Trump is giving diplomacy some space.
The president is keeping all options on the table. I've spoken with the negotiators. I've spoken with Secretary Haig. What the president is doing right now, as we've seen all along, is giving some talks, some space. Talks are ongoing. They're happening at every level, from the more technical aspect of it all the way to the highest levels, of course.
But skirmishes between the Houthis and Saudi Arabia intensified, with the Iran-backed rebels saying they fired missiles and drones on Saturday at facilities linked to Saudi Aramco. For more on this story, let's bring in Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East and North Africa. Stuart, good to have you on. So a pause, seemingly, for the time being. What is the potential of this going back to a flare-up situation?
I mean, I'd say reasonably high. What's not clear is the reasons behind the pause, and then that informs kind of our thoughts about what might happen going forward. So we don't know exactly why. We can make a reasonable guess, though, that at least in part it is concerns that are twofold. One, they had 13 consecutive nights of attacks on Iran, and yet that didn't really seem to diminish Iran's ability to threaten shipping. We saw attacks on ships throughout that period, including at the end. So it didn't seem to be getting very far. Number two, there is a serious issue here with US defensive munitions. They're having to draw from stockpiles in Europe and in Asia to keep those going. They are very effective, but they're not infinite. And given that Iran seemingly has an almost bottomless supply of things like drones, you've got this imbalance there between the US ability to defend against those as well as Iran's willingness to launch more and more of them. So that's maybe one part of it. The second part of it is, as you said, there's these talks that happen between Oman and Iran. Maybe there's some headway being made there in terms of resolving some sort of authority or a series of authorities over Hormuz. And I think if they can resolve that, that's at least part of the way there.
And that was going to be my second question, right? We've reported that the deputy foreign ministers have met. The delegation left on Saturday. And then what we see in the Strait of Hormuz is a blockade still at play despite the pause, essentially, by the United States on the attacks. What is the status of the movement right now in the Strait of Hormuz?
So, I mean, I think the issue really stems from what Iran sees as its position on this. So it points to its interpretation of the MOU that they signed in June, which, according to Iran, gives it sole authority over Hormuz. What seems to be happening now is some discussion with Oman about maybe a joint authority, or you have two different routes going through there, a northern route and a southern route. Maybe they're controlled by the two littoral states. There's some financial arrangement around that. Again, that's all very vague. So that seems to be the direction of travel, but we're not getting details, so hard to know.
Yeah, not getting details yet. Stuart, thank you, as always, for your time. Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Now, let's continue this conversation. Joining us now is Frédéric Schneider, non-resident senior fellow at the Middle East Council on Global Affairs. Frédéric, good to have you on this morning. I was just talking to Stuart about the status of play in the Middle East right now. We have a pause over the weekend. What is the potential of us going back to a state of re-escalation in the Middle East, where the U.S. attacks and Iran attacks countries in the region and continues its chokehold, really, over the Strait of Hormuz?
Well, as you point out, the Iranians have a chokehold on the strait, and that is obviously not in the interest of the United States or any other Gulf states, really. And as such, this has a big potential of re-escalating. We will see where this goes. I think this was not a pause by choice, as Donald Trump is claiming. I think it was driven not only by a shortage of ammunition, really, and strikes that spooked the U.S. and also the Gulf states, but also the closure of the only escape route, really, from the strait, which is the Bab el-Mandeb and the Suez Canal.
Yeah, and that was going to be my next question, really. And what we're seeing right now, Frédéric, is a double whammy of some sorts, really, because the Strait of Hormuz has been at risk since the start of this. The Red Sea was quite immune from it, but now we're seeing this parallel war playing out between the Houthis and Saudi Arabia. So if both if both waterways are at risk going forward, what does that entail for energy prices and then economies in the GCC?
Well, that was always going to be another step on the escalation ladder, and we've seen that before, right? So the Houthis have closed the strait before, and that has led to a durable reduction in traffic. Traffic has never recovered from pre-2024 levels in the Red Sea, and the Saudi escape through the East-West pipeline was basically the only scalable workaround around the strait. And closing that now, obviously, will remove around, if it's perfect, will remove about 5 to up to 7 million barrels per day from global markets on top of Hormuz. So that will have, obviously, a big effect if that materializes completely.
Yeah, and we also have reports that Prime Minister Netanyahu is going to the United States to meet with President Trump to discuss the Iran war as well. But Israel, throughout the past 2 weeks or so, has kept relatively quiet, given its stance since the start of this war. Why do you think that is, and what do you think comes out of this meeting, Frédéric?
Well, I think obviously Israel has no less appetite to strike Iran than before, but it also, I guess, does not have any appetite in getting struck. And as we have seen in the past days, the potential of being struck by Iran is high. We've seen that in Jordan especially. And we see that not only in the diminished air defense capabilities, but also in things like strikes on radar stations that are supposed to also prevent strikes on Israel. And that has renewed strikes on Israel, successful strikes on places like Tel Aviv, on places like Haifa have enormous consequences on Israeli, not only strategic assets, but also on the economy.
And just finally, Frédéric, the nuclear deal between the United States and Saudi Arabia, there were reports as well that President Trump said it hinges on Saudi normalizing ties with Israel. How realistic is that at the time being? And where do you see the future of this deal?
Well, these things have been long in the making. So Saudi Arabia has always said it seeks nuclear power. It also seeks enrichment. And many observers say the enrichment part is clearly geared towards having the option of a nuclear weapon in case of Iran seeking a nuclear weapon. And that's clearly probably why this is on the table again. This is obviously a very touchy issue, especially with normalization. And I think at the present moment, at least the Saudi government does not have any interest in political interest in following that route.
Yeah. All right, Frédéric, we're going to have to leave it there. Frédéric Schneider, non-resident senior fellow at the Middle East Council on Global Affairs. Thank you for your time. Now, Israeli Prime Minister Benjamin Netanyahu says he will travel to New York to attend the United Nations General Assembly, regardless of a clash with Mayor Zohran Mamdani over the ICC warrant for his arrest. Mamdani last week backed off a pledge to enforce the warrant, conceding that he lacks legal authority. But he still called Netanyahu a war criminal who's not welcome in New York City. Netanyahu, meanwhile, says he'll also meet with President Trump during his visit to discuss the war in Iran.
Our intel services and yours are working so close together that it's not that I'm going to present new information, but I think it's a good thing to have the opportunity to sit with our good friend President Trump and to hear what he has in mind, because I think in many ways it's his decision.
Still ahead, Callanish Capital joins us with their outlook for markets as U.S.-Iran tensions ease and traders shift focus to major central bank decisions due this week. This is Bloomberg. Welcome back to Horizon's Middle East and Africa. Bank Indonesia Governor Perry Warjiyo has unexpectedly resigned, citing personal reasons, 2 years ahead of his term expiring. Senior Deputy Governor Distri Damayanti will take over as acting governor. With the earlier resignation of the country's finance minister, Indonesia has now lost the 2 key personnel most well known to investors. Indonesia's currency, stocks and bonds all fell on the news. Joining us now to discuss all things market is Haig Bathgate, CEO of Callanish Capital. Haig, we were talking about the Indonesia Central Bank, but I want to focus also on another central bank, the Federal Reserve. Later this week, we're expecting a decision. Now, with everything that's been happening from the Middle East, but also in the U.S. Markets, what do you expect the Fed does on Wednesday?
Well, I'm expecting them to do absolutely nothing. But look, I think it's interesting that the narrative's changed now from the Fed. So they're saying they're very much data dependent. They're not going to give this forward guidance like they have in the past, which obviously makes a rod for your own back, because if you change your mind, then you're accused of political bias or something else. So I think coming into the midterms, they're going to be very reluctant to do anything unless the data clearly says that they should. And obviously, with the increase in the oil price that we've seen over the last few weeks, the probability of a rate increase has gone up, but I still think they'll hold.
So we'll hold for this coming Wednesday, but then for the remainder of the year, because the data will translate into the coming months, right? Especially the uptick that we've seen in recent weeks. Do you think that they'll hold for the remainder of the year, and then next year we look at either a hike or a cut?
Yeah, I'm sure they'll say they're completely independent, but of course they are going to be cognizant of the fact we are coming into the midterms, and they're probably not going to want to get into the middle of the spotlight. Certainly, historically, that's what we've seen happen. I think the surprising thing, though, is we haven't really seen these second-order effects everybody was worried about. I mean, it's incredible how quickly the global economy has adapted. I mean, obviously, the oil price is the barometer for the Strait of Hormuz, but we haven't seen the squeeze yet that we were told, fertilizer is going to feed into food prices and so on. So the market does seem to be interpreting that, the economy is adapting quicker, as we saw in the Ukraine-Russia war as well, I think.
Yeah. And then when it comes to the market in the U.S., just generally, the tech game and everything we've been seeing there, well, since the beginning of the year, but especially over the past couple of weeks, we saw some of the Max 7 reporting. We have 4 reporting this week. What are you looking for there? Is it just a profit speed, or are we looking at wider things like CapEx, like data center investments?
Yeah, so we're kind of in this limbo period at the moment, because obviously we're seeing all the CapEx going out. So we're looking for 2 things. I think, are they able to deploy the CapEx? Because we're seeing people announce big numbers, but, if you look at the likes of Tesla, they haven't been able to deploy nearly as much CapEx as they were initially anticipating. So there's one, is the CapEx being deployed? And we're starting to see that through the DRAM suppliers and so on, in recent months. But 2, are we going to start to see the payback? It's probably still a little bit too early to tell. But if we start to see some tentative signs that they are getting the payback on the capex, that should appease market nerves a little bit, I think.
And then geopolitics, Haig, are back in focus. Now we've seen a calmness over the past couple of days of the weekend. Do you think the markets have completely gotten this wrong, and now we reprice the geopolitical risk out of the region?
Yeah, I think the problem with the geopolitics is just so hard to position for, because this stuff is changing almost by the day, and obviously 90% of the discussions we were not privy to anyway. But I think the market has been pretty good at pricing in so far. It was pricing some sort of settlement. I think the idea that everything was going to go quiet and run swimmingly was probably a bit fanciful. And this is not probably the last time we'll see tensions flare. But I think on both sides there is there's a push to get to some kind of resolution, and you'd have to hope, and certainly that's what the markets are pricing in.
And then when it comes to geographies, currently U.S. exceptionalism is being questioned. China is struggling with growth. Europe is lagging. So the question really is over the next 12 to 18 months, what are the best opportunities geographically for someone like you?
Yeah, so the good thing is, because we keep seeing these earning beats in the US, we're seeing some of the incumbent techs actually now at pretty attractive levels. If you look at the valuations of the sort of traditional Mag 7s, with the exception of SpaceX and Tesla, actually seeing them at 10-year relative discounts to some of the other S&P 500 companies. And we see huge value in China. I mean, China's trading at such a discount in Asia more generally to the US market. As long as you can deal with the volatility and as long as you can take a 2 to 3 year view, to us, Asia looks pretty attractively priced at the moment.
And so do you think that everything that's happened so far this year and its impact on markets has changed the way investors build their portfolio and their general diversification hedges?
Yeah, look, I think we are definitely near the end of the cycle than the start of it, clearly. And I think there is, there are the sort of behavioural traits in the markets of complacency. And obviously, it's always something left field that comes out that we don't see until you've got the benefit of 2020 hindsight. So we're certainly trying to build up sort of uncorrelated asset classes at the moment, just because we don't know where the next, spiking of the bubble might come from.
Yeah, well, maybe it's not AI. Maybe we look forward to another theme. Haig, thank you, as always, for your time. Haig, Bathgate, CEO of Callanish Capital. Now, still ahead, while AI is changing the landscape for consultancies in the region, geopolitics is increasing competition among GCC countries. Later in the show, we'll discuss the future of hiring in the Middle East with Deloitte. This is Bloomberg. Welcome back to Horizons Middle East and Africa. 2 people have died and at least 5 injured in a shooting at a food festival in Seattle. Media reports say police began evacuating the area after the shooting at 6 p.m. local time. Details about the suspect have not yet been released. And German police say the suspect in Saturday's deadly van attack at Berlin's LGBTQ Pride event has been shot and killed. He was killed Sunday evening in the Spandau district after rushing towards officers with a knife. The suspect, a German citizen, allegedly drove a van into a crowd at the Pride event, killing 1 person and injuring 29 others. Police say he was a known ISIS sympathizer. And firefighters are battling wildfires for a 6th consecutive day in France and Spain. More than 300,000 people have been evacuated as temperatures are forecast to rise further in Europe. French and Spanish officials say the fires are so strong they are creating their own microclimates. And coming up, we take a look at CXMT's blockbuster IPO and why the memory chip maker is now China's largest onshore listed firms. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Holding fire, the United States and Iran pause attacks as Iranian and Omani officials meet for talks to resolve shipping through the Strait of Hormuz. And oil retreats as tensions ease, stocks gain, and the dollar weakens as investors dial back energy supply concerns. And robust debut, Chinese memory chip maker CXMT soars by more than 500% as it starts trading on the Shanghai exchange, tapping into investor hunger for the AI trade. It's just gone 8:30 across the Emirates. I'm Abir Abu Omar in Dubai. Now, aside from that whopping increase in CXMT that we'll talk about later in the show, we're seeing a start to a more positive week in the equity space. S&P futures 0.7% higher. NASDAQ 100 futures also higher this morning. Now, we're looking out for earnings coming out later this week. We're also looking for the FOMC on Wednesday. But when it comes to those big tech earnings, investors are looking for more than just a profits beat for the time being. Now, we saw a sell-off last week on capex concerns. That is something that investors are still very much looking forward to, and that will determine if the recent AI correction is set to deepen or set to reverse course. But when it comes to Asian equities, 0.3 higher this morning. We'll talk more in detail about why that is happening. Between losses and gains, the Kospi in South Korea was gaining, then it was losing. Now, that is a story that we've seen quite a bit over the past 6 months or so. But then our story in the region is oil prices. Brent crude 4.7% lower this morning. We saw a de-escalation over the weekend. We don't know the reason why the United States stopped attacking Iran on Friday, but Iran said that will also halt attacking countries in the region and shipping through the Strait of Hormuz as a result of the United States stopping its attacks after 13 consecutive days of hitting targets in Iran. So you're seeing Brent crude reacting to that, and then the yield on the 10-year notes in the United States, 4.63%, dropping 4 basis points. As I said, we're waiting for that Fed decision on Wednesday. This is a week filled with central bank decisions. We're also waiting for the BOE and the BOJ, though no changes are expected there. We also have economic data from the United States, PCE, coming out on Thursday, so we'll keep an eye out for that. Now, for the performance of what is happening in Asian markets, we've got Avril Huang again in our Singapore studio. Avril?
Yeah, Veer, we're watching the AI trade, and despite some of those initial gains across the major indices, Nikkei, Kospi, TAIEX, things are looking more tentative now. And I think this speaks to the idea that the AI trade, the picks and shovels part of it, that is still in question, with investors, as you alluded to, demanding that with these huge capital expenditures, does it necessarily translate into huge enough profits? And with those questions dogging the minds of investors, I suppose this is what you're seeing in trade today. I would just highlight, though, even though you're seeing the likes of Kioxia, which is, of course, a stock that has been benefiting from the memory trade that's down 10% today, it's interesting that the broader-based topics in Japan is managing to clock gains. So this could bode well for the broader Japanese markets in the near term. Aside from that, also another encouraging sign in the form of the Chinex in China, and that is also in the green today, along with this trading debut of Changxin Memory, right? This homegrown champion for chips, which is China's best shot, it's seen by investors, to reduce the reliance on foreign suppliers. Today, this is how it is faring on its first day of school, surging well over 530%. Abir?
Avril Huang in our Singapore studio. Look at that, 531% for CXMT so far. Now let's dive deeper into the performance of this mega debut. It raised $9.8 billion and the second largest IPO in China's history. Our Asia equities reporter Winnie Su joins us now from Hong Kong to dig deeper into what is happening there. Winnie, there is strong appetite, clearly. Look at that performance. Can you tell us more about what is happening there exactly?
Yeah, good morning, Abir. A very impressive debut. We're talking about the stock up more than 500%, which is likely going to make it the biggest listed company in mainland China if it actually holds on to those gains. Now, you just mentioned how it raised $9.8 billion for its IPO, which is also the second biggest listing in China in history. Now, the strong appetite is very evident from how much the prices are surging. But also, we've heard from local media saying that there is slowness in exchange because of how much of the trading volume we're looking at. And the excitement is also coming as investors turn very optimistic on this the world's fourth biggest DRAM company amid this whole memory crunch globally. And we are looking at the company potentially taking on its rivals, including Samsung Electronics, SK Hynix, and Micron. And as Avril just mentioned, because of how it's growing its supply chain locally, it's likely going to help Beijing with its ambition for its tech self-sufficiency as well.
And Winnie, just how much further upside can we see after this 500% or so jump, and the impact really of all of this on broader markets?
Yeah, very exciting jump already, 500%. But for now, the upside, as we have seen from the sell-side reports, still seem to be, quite there. And we are looking at Nomura potentially saying that this is likely going to see a 1,200% jump from its IPO pricing. And they have just rated the company at a buy rating, citing that it's likely going to expand its market share share further to about 18% end of 2026 versus where it is right now at 10%. And that is also likely going to add to the competition that we are seeing for SK Hynix and Samsung. And that's why you are seeing shares there down today. And it's likely going to take up not just the market share of these companies, but also adding further pricing pressure for these companies as well.
All right, Winnie, we're going to have to leave it there. Winnie Su, our equities reporter, joining us from Hong Kong. Now, staying with the AI theme, NVIDIA is reportedly in talks to provide a guarantee of about $250 billion of financing for OpenAI. The Wall Street Journal says the deal should help OpenAI lease a 10-gigawatt data center hub that SoftBank is developing in southern Ohio. The complex is a centerpiece project for both SoftBank and the Trump administration and would be among the largest in the world. NVIDIA will also invest $1 billion in South Korea's Naver to help finance an AI data center under construction. The U.S. company is also expanding its partnership with SK Group to build more than 2 gigawatts of AI data centers on the Korean peninsula. NVIDIA says the broader initiative with SK Group could ultimately be worth over $500 billion.
This is the golden ages for Korea, as you know. Their semiconductor business is booming. Their industrial business is booming. You know, this is a country that has the ability to help the world build out the AI infrastructure, that they're incredibly adept at adopting new technologies, and is a really technologically forward-leaning society.
Now, AI is changing the game for regional consulting amid geopolitical uncertainty and rising competition between major economies. For countries in the GCC, investing in data centers appears key in order to diversify away from oil. For more on this story, I'm now joined by Tamer, Charife, Technology and Transformation Growth Leader at Deloitte Middle East. Tamer, good to have you on this morning. I want to talk about the region, consulting in the region. We also mentioned the geopolitics in the intro, but I want to start with growth and where it's mainly coming from for the time being. So where are you seeing those pockets of growth coming from in the region?
Well, first of all, thank you very much for having me. And I think there are multiple shifts in the region that are defining the pockets of growth. If we look at the major changes we're seeing in the current situation the region is going through, number one is the impact on the supply chain and logistics. And the GCC has taken a position to accelerate looking for alternatives on supply chain, on sharing, the storage of oil and gas, and wanting to make sure that this has become a national priority. Aside from the supply chain and logistics, we also look at the clean energy. So the GCC region have been making significant investments in the clean energy, in the energy transition, and also making leverage of the low cost of extraction, and capitalizing on being one of the key exporters of clean energy, and specifically more on the oil and gas side. Now, if we also look at another shift in the region, which is the AI shift and the major investments that have been put in the critical infrastructure for AI, and also what does that mean in terms of the workforce? Now, from AI perspective, the focus of the region is to move from ambition to execution. And that has fueled a lot of pockets of growth in the region. Now, from industry's perspective, we've seen
I just want to focus on the AI bit a little bit. I just want to focus on the AI bit for a second. Countries in the region, including Saudi Arabia, the United Arab Emirates, have been focusing quite a bit on data centers, but those have emerged as potential targets over the past 4 or 5 months in this war. Do you think the investment strategy there shifts or gets reallocated?
I think the investment is being reallocated in some instances, mostly to support the mandate of localization and sovereignty. So the GCC region have been focusing on AI sovereignty and looking at the entire stack that will support the AI ambitions, starting from the AI infrastructure, and then forming major deals with global hyperscalers and global entities investing in the AI infrastructure. And that has been evident across the region, as you mentioned earlier. We see it across all of the GCC region. AI as a mandate has been at the core of how to incentivize localization, and mostly AI has been at the forefront of it.
And something that we've reported on quite a bit, Tamer, is this competition between Saudi Arabia and the UAE, even before this whole thing started, and where consulting firms sit in the midst of all of this. So what are you telling clients in terms of this competition between the United Arab Emirates, Saudi Arabia? Where does your business lie? And where do you see pockets of opportunity in the region outside of those two countries?
I think, Abir, it's more of a global competition when it comes to AI, and the region is part of it. Across the GCC region, we see the major opportunities in Saudi Arabia and UAE. Also, Qatar have been significantly investing in AI infrastructure, in sovereign AI, and developing the AI mandate. Kuwait and Oman as well have been investing heavily in AI. And you will see these investments translating in multiple capacities, starting from infrastructure, building data centers, the AI data centers, ensuring that the power is properly allocated to powering all of these major AI infrastructures. And we've seen also multiple hyperscaler agreements that have been signed over the last couple of years, turning the region, including Saudi Arabia and UAE, as one of the leading nations to drive the AI rate. And the pockets of opportunities appear across people, process, technology. So we see the tech infrastructure. There is huge opportunities when it comes to upskilling the human resources aspect across the region. You will see countries, specifically in Saudi Arabia, UAE, and Qatar, focusing on localization and upskilling the resources to cope up with the AI mandates.
All right, Tamer, we're going to have to leave it there, but thank you so much for your time. Tamer Charife, Technology and Transformation Growth Leader at Deloitte Middle East. For more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Now, Kuwait has agreed to a $16 billion deal with Blackstone, Brookfield and KKR involving its oil export pipelines. The firms will hold an equal share of 49% each, where they will lease back the usage rights to all pipeline assets of a subsidiary of the state-owned Kuwait Petroleum Corporation. The deal, which is the largest FDI in the country's history, is expected to generate more than $7.8 billion and boost crude capacity to 4 million barrels a day by 2035. Now, coming up, Morocco is counting World Banks to help finance its $26 billion gas pipeline along the coast of Africa. Details on that story coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Morocco is seeking financing from the Export-Import Bank of the United States and the World Bank for a proposed $26 billion gas pipeline, which would run across the coast of Africa. If successful, the energy project would also ferry gas to Europe amid the disruption of energy flows caused by the Iran conflict. For more on this story, we're now bringing in our Chief Africa correspondent, Jennifer Zapasaja. Jennifer, what more do we know about this bid to get funding for the project by Morocco, essentially?
Well, Abir, good morning to you. We've been hearing about this pipeline project for at least a decade, and so the fact that we're talking about financing seems like it does have a bit more impetus to move forward. So you mentioned there $26 billion, which is the estimated cost of this pipeline project. We know, in fact, that the U.S. Export-Import Bank is reportedly in discussions to help with some of the financing, and according to a Moroccan ambassador, we potentially could see some World Bank funding also being a part of this proposed project. And really, I think what's important to discuss is that, as I was mentioning, we have been seeing discussions about this pipeline project for several years, but it seems like now, with what you're mentioning, of course, there have been disruptions from the conflict in the Middle East, as well as more demand needed for Europe that potentially is kicking off some of these financing discussions. And so at this point in time, we're waiting to see how things move forward. It was just a few weeks ago that Bloomberg did in fact get some reporting about a company that was being established in Casablanca to help mobilize funding. So perhaps we actually do see this project moving forward in a substantial way over the next few years, which of course Moroccan and a number of these countries that are potentially involved are waiting.
And Jen, can you just walk us through how this proposed pipeline would work in reality?
Yeah, it's really fascinating, Abir. It's $26 billion, as you were mentioning, and at least what we know about the length of how long it could be 6,800 kilometers. It will run through 13 countries along the West African coast, as you were mentioning, collecting gas and other deposits from countries such as Nigeria, Senegal, and Mauritania. From there, what we know about this project is that it will connect directly to what is already the existing Maghreb-Europe gas pipeline in Morocco, and thereafter transport roughly 30 billion cubic meters of natural gas annually, splitting supply from what we know between domestic priorities in Morocco and, of course, European exports. But we should note, Abir, that there are a number of energy projects which we cover on the show that are happening across the continent. Of course, we know that Aliko Dangote in Nigeria has his refinery. There's also in Kenya proposed project there, as well as in Algeria. So perhaps this, again, just solidifies what we're seeing a number of African countries being able to export some energy to various parts of the world.
All right, Jen, we're going to have to leave it there. Bloomberg's chief Africa correspondent, Jennifer Sapazaja. Now, coming up, it is a big week for earnings. We'll look at what to expect next. This is Bloomberg. It is a big week in Europe as earnings season ramps up, with results expected from major banks, car makers, aerospace, airlines, and defense firms. So to discuss all of this, we're now bringing in Bloomberg EMEA earnings specialist Chloe Melly. Chloe, a lot to unpack there. What are you expecting from Europe's embattled auto sector after the earnings that we saw from Volvo and Volkswagen last week?
Yeah, well, it doesn't bode very, very well for the car-making sector. As you mentioned, we had Volvo Car withdrawing its sales target. We had Volkswagen cutting its guidance. And the main thing that was mentioned by both of those companies was really the weakness in the Chinese market, where the car makers are facing a lot of competition from local manufacturers. And then those local manufacturers are also expanding into Europe and threatening some of that market share there as well. And so this is the context in which we are going to see a BMW, Mercedes, Porsche, Stellantis and Renault report also this week. And so for BMW and Mercedes, this is particularly relevant. They have a really big China exposure, so they could see some weakness. Porsche looks to be a little bit more resilient. And then for Stellantis, the big question is really going to be around this ongoing turnaround in North America. This is really where it wants to focus, moving forward. And so we'll be watching out for any kind of progress there. But overall, the big question is, do we need deeper cost cuts for that sector? Do we need more support from the European Union? And what can actually get the car-making sector out of this slump?
And Chloe, you've got a busy week ahead of you. So what other companies will you be watching closely over the next 5 days?
It's really going to be around banks to start off with. So we've got UBS and Barclays reporting. This is going to be quite important when it comes to equities trading. We had blowout results from Wall Street and from BNP Paribas as well. So we'll see if that continues for those banks. For Deutsche Bank, it's a little bit less relevant because they have more of a fixed income trading exposure. And then they also have this private credit exposure still very much weighing on sentiment. So this is going to be a big sector to watch out for. And then energy is also going to be in focus with Shell and Eni.
All right, Bloomberg EMEA earnings specialist Chloe Melly with a lot to unpack for the remainder of the week. Now that is it for Horizons Middle East and Africa. Stick around with us for Daybreak Europe. This is Bloomberg.